Hey everyone, this is C Crypto Daily Buzz. Today is March 24th, 2026. This channel summarizes the most important crypto news for investors in Southeast Asia, including traders and long-term holders in the Philippines, Vietnam, Indonesia, Thailand, and OFW communities using crypto and remittance every day. Let's go through 3 key stories you should pay attention to in today's market. Issue 1. Bitcoin grinds in the 70K, 72K range as ETF inflows rebuild and RSI turns neutral. Bitcoin is grinding sideways in the low $70,000 range, while ETF inflows and on-chain momentum quietly rebuild under the surface. Recent market analysis shows BTC trading around $71,000 with its 14-day relative strength index rising from oversold levels near 30 on March 1st to the low 50s by March 10th. Signaling a move back into neutral territory rather than clear overbought conditions. At the same time, spot Bitcoin ETFs have logged roughly $934 million in net inflows over the latest reporting week, with daily trading volumes climbing to more than $23 billion across products, suggesting that institutional demand remains a key driver of support in the 70K area. For investors in Southeast Asia, including the Philippines and Vietnam, my view is that this kind of slow grind is what an accumulation band often looks like. Price chops around a big level while leverage gets washed out and strong hands quietly buy. It does not guarantee a breakout, but it does mean chasing short-term FOMO is less important than having a clear plan for how you build or trim positions around these ranges. Issue 2. Asian regulators step up 2026 enforcement on stablecoins, exchanges, and tokenized assets. Across Asia, 2026 is turning from a policy talk year into an enforcement year for stablecoins, exchanges, and tokenized assets. South Korea and Hong Kong are pushing ahead with licensing regimes that bring more trading platforms, custodians, and stablecoin issuers under supervision, while China is tightening control over ECNY and cracking down on unauthorized tokenization of real-world assets to reduce shadow leverage. Reports also highlight that many APAC markets, from Singapore to Japan and Indonesia, are aligning more closely with global standards such as the FATF travel rule and the OECD crypto asset tax reporting framework, making anonymous large transfers and unregistered cross-border platforms harder to use without triggering red flags. For investors and OFW users in Southeast Asia, I think the message is that regulatory hiding spots are shrinking. Licensed venues and transparent stablecoins are likely to enjoy better access to banks and payment rails, while gray zone exchanges could face sudden restrictions. Positioning your capital in jurisdictions and platforms that are leaning into this convergence can reduce the risk of waking up to frozen accounts or surprise delistings. Issue 3. February Hack Report. Address poisoning, fake approvals, and bridge exploits drain hundreds of thousands. On the security side, a new February 2026 hack report shows how everyday wallet habits are still leading to big losses. According to Nominees' crypto security review, one victim on Ethereum mistakenly sent about $100,000 in USDT to a lookalike address after confusing 2 almost identical wallet strings, while another address poisoning scam saw roughly $157,000 sent to a malicious address that had been seeded into the victim's transaction history. The same report describes phishing approval attacks where users unknowingly signed malicious token allowances that granted scammers permission to drain more than $300,000 in USDT from their wallets, as well as a separate IOTEX bridge incident where attackers exploited cross-chain minting logic to create unbacked tokens and move them before the issue was contained. For traders and OFW communities in Southeast Asia, especially active on Ethereum and EVM chains, my takeaway is that most of these losses were preventable with slower, more skeptical habits. Always double-check full wallet addresses instead of copy-pasting from history, use address books or ENS where possible, and treat any signing request that changes token approvals as high risk unless you fully understand which contract you are authorizing. To summarize today's news, first, Bitcoin grinds around $71,000 as ETF inflows and RSI stabilize. Second, Asian regulators turn 2026 into an enforcement year for stablecoins and exchanges. And third, February hacks highlight address poisoning, phishing approvals, and bridge exploits. This video is for information and education only and is not financial advice. All investment decisions and risks are your own responsibility. If this video was helpful, please subscribe, hit the like button, and turn on the notification bell. For real-time alerts and trading signals, join our Telegram channel, link in the description. See you in the next one.